Neobanking and Digital Banking. Episode 1. The Rise of Neobanks, How the Future of Banking Went Mobile. They have no branches, no tellers, no marble floors or endless paperwork, yet they're taking millions of customers from the world's biggest banks. Welcome to the rise of neobanks, where banking lives inside your phone. From crisis to reinvention. The 2008 financial crisis didn't just break Wall Street, it broke trust. People were tired of hidden fees, waiting weeks for transfers, and dealing with banks that seemed more like fortresses than services. Out of that frustration, a new generation of startups asked a radical question: what if a bank could be built like an app? The answer came fast. Between 2010 and 2020, companies like Revolut, UK, N26, Germany, Chime, US, and Nubank, Brazil, exploded in popularity. No branches, no bureaucracy, just instant onboarding, transparent pricing, and sleek design. By 2025, Nubank alone reached over 100 million users across Latin America, becoming one of the most valuable digital banks in the world. Revolut, founded in 2015 in London, expanded into more than 35 countries, handling billions in daily transactions, all from a smartphone. This was more than convenient. It was the start of banking without walls. Why people fell in love with neobanks. Traditional banks were built around products such as loans, deposits, credit cards. Neobanks flipped the model. They were built around people. You can open an account in minutes, see your spending instantly, categorized and visualized, get alerts for every transaction, block or unblock your card with one tap. It wasn't just banking, it was empowerment. Revolut lets users trade crypto, stocks, and commodities from the same app. Chime helped Americans with poor credit avoid overdraft fees and get paid early. And Nubank turned millions of unbanked citizens in Brazil and Mexico into first-time participants in the financial system. In emerging economies, this wasn't luxury, it was liberation. For someone in rural Brazil or India, getting a physical bank account can take days, even weeks. A neobank account, 10 minutes from your phone. The business behind the boom. But here's the question everyone asks: if neobanks don't charge fees, how do they make money? The answer lies in data, partnerships, and scale. They earn small transaction fees every time you use their card. They offer premium plans like Revolut Metal or Monzo Plus, with travel insurance, cashback, and higher withdrawal limits. They lend money, and because their costs are lower, no branches, fewer employees, they can pass savings to customers while staying profitable. Even more important, they build ecosystems, not accounts. They connect with investment platforms, crypto wallets, insurance providers, even lifestyle apps. In that sense, neobanks don't sell banking, they sell freedom of choice. The psychological shift. Every financial revolution starts as a cultural one. For Gen Z and millennials, trust doesn't come from marble counters or brand legacy, it comes from UX, transparency, and speed. They want their bank to feel like Netflix, not like the DMV. That's why the average neobank user opens their app more than 25 times per month compared to 5 or 6 times for a traditional bank. Engagement is loyalty. Neobanks also use AI and behavioral data to make finances feel personal, predicting cash flow, giving real-time advice, or alerting you before you overspend. Banking stopped being passive, it became interactive. The turning point. Now, traditional banks are racing to catch up. JP Morgan Chase launched its own digital-only bank in the UK. Goldman Sachs created Marcus. Legacy institutions are partnering or acquiring neobanks to survive in a market where the smartphone is the new branch. Even regulators have started adapting. The European Central Bank, FCA in the UK, and Banco Central do Brazil now issue specific licenses for digital banks, recognizing them as fully legitimate players in the system. By 2030, analysts estimate that over 40% of all retail banking customers will primarily use a digital or neobank account. That's not a prediction, it's a trajectory. The human side of a digital revolution. But beyond data and profits, there's a deeper story here. For millions, neobanking represents dignity. It's the single mother in Sao Paulo managing her finances for the first time. The migrant worker sent money home without paying 10% in fees. The teenager in Berlin learned how to save, not because a banker taught him, but because an app did. Neobanking isn't just about disrupting banks. It's about redefining trust for a digital generation. What comes next? This is only the beginning. In the next episode, we'll open the black box and ask the question that every skeptic still has. If neobanks don't charge you, how do they make money and can they really last? Stay tuned, subscribe now and join the journey. For episode 2, Behind the App, how neobanks make money and why they're so good at it. Because understanding this new business model is the key to understanding the future of money.